Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A software developer and a retailer who sells software and other technology products as well. That's what you're going to hear about in this edition of Top Stock Picks with our strategists, Nina Mishra, who joins me here at the desk, and Brian Bolin, who is with us on Skype. Brian, we're going to start with you. Your stock is Zendesk.
Yeah, Zendesk is my stock. ZEN is the ticker, and it's a good one for a company that his name is pretty much reflected inside of the in the name there. So we always kind of like to see that. We see that it is a Zacks rank number 3, and that's a hold, and we'll go over that in a minute. But it has that growth and value divergence that I love to see. So an A for growth and an F for value. That tells me right away that I am on the right page if I am looking for a growth style stock, or a name that is a little bit more growthy. So let's take a look at why it's a number 3. And I think, I just want to point out just a couple things here. So down here, the surprise history right here, as we can see, we get these huge beats. We get 233% positive surprise, 125% surprise, 167% surprise. And this would be, a gigantic surprise as well here, but, the computer has a little trouble with with 0 in there. So that would be like a 300% surprise. So gigantic surprises because they're gigantic beats. But at the same time, we see earnings estimates here are actually moving lower. So we've got 5 cents that kicks down to 3 cents. 6 cents is kicked down to 5 cents. For the year, we got 31 cents moving down to 28 and then back up to 29. But, kind of the same story here, 74 coming into 67. So when we see moves like that, we think, boy, that's not good. And that isn't the direction that we want to see. But when we think about the size of the beats, these moves on these estimates, it almost feels like we're sandbagging here a little bit. Or the company is guiding to a number that they know they can beat. And I think that is a very important aspect inside of the story for Zendesk. And if we go ahead and take a look at the valuation, I just wanted to bring this up because it is stiff, right? I'm not going to, sugarcoat it here. Forward PE, 281 times forward earnings. Your price to book is exceptionally large at 21 times. Price to sales at 15 times. But you do get that 40% top line growth. So it's the good and the bad. If you want that good growth, you're going to have to pay for it. If you take a look at the chart here, now you know why investors kind of like this one. You see that from the price and consensus chart, we can see that big gap between this year and or the 2017, 2018 earnings and then 2018, 2019 earnings. That big gap between those colored lines tells me there's big earnings growth. When you see big earnings growth like that, along with consistent beats, you're going to have a stock price that's going to be moving higher, and that's exactly what you have here in Zen.
All right. Thanks for that Zen moment. Nina, you have the retailer, Best Buy.
Yes. So it has not been easy for brick and mortar retailers because of this rising trend for online shopping,
yes,
particularly at Amazon. Best Buy is one of the very few retailers that have been doing well. And in the past 3-4 years, they have really improved their merchandise, their marketing, their in-store shopping experience. And they have focused a lot on their e-commerce channel. So that's why their online sales have surged. And according to Best Buy, about 70% of U.S. population lives within 15 minutes of a Best Buy store. So that is why shoppers are able to buy online and then pick up in store, in most cases within 2 days without paying any shipping. And in many cases, they match Amazon's and other competitors' prices. And of course, they have also benefited from the demise of their peers. In fact, Best Buy is the only specialty electronic retailer that has survived in the last few years. So they reported excellent results, again, beating on both the top and bottom lines and also exceeding their own guidance. And they mentioned the immense popularity of video game Fortnite, which resulted in a surge of sales of headphones and other accessories. Now, if we go to quote page on Zacks.com and look at detailed estimates, you can see that estimates have gone up significantly since they reported results. So many analysts have been raising their estimates because results were much better than expected. And if you go to price consensus and EPS surprise chart, it looks beautiful. They have missed only once in last 5 years. And the share price has more than doubled in the last 3 years. But it is still below its 52-week high reached last year, so I think there is still scope for growth. And another reason why I like Best Buy is they have been returning a lot of cash to shareholders in the form of buybacks and dividends. In fact, they raised their dividend last month, and this was the 6th consecutive year of dividend hike. The dividend is very juicy now at 2.85%. It's a Zacks rank number 2 stock by ranked, A for value, A for growth, A for VGM. So it's definitely worth a look.
Okay. Do you own either of these 2 stocks we talked about?
I do not.
All right. Brian, how about you? Do you own either of these 2 stocks?
I do not.
All right. Thanks for that, both of you. And don't forget, you can always find more stock information on our website, Zacks.com. All you need to do to get started looking is get over to the homepage. With Nina and Brian, I'm Terry Ruffalo.